Welcome to the stream. Howdy, howdy. I'm going to give everyone a few minutes to get in here. And then we will get started. If you have any questions, throw them in the chat and we'll get to those right away. Howdy, howdy. All right, we're going to get started in just a minute here. Is it best to make trades? All right, we'll start with questions. So if you have any questions about the strat, for those that know the strat, ask away. And then we'll get started talking about what we did today. So is it best to make trades on the bottom of the hour rather than the 30? So the reason we focus on the bottom of the hour is because when you're trading intraday, you want to establish control. So today was a good example of that. So whenever you have a 2 down 60, the sellers are in control. Even if it's green, the sellers are still in control if it's a 2 down. So when you have a 60-minute period of control, it divides the day up into, I believe it's 7, 1, 2, 3, 4, 5, 6, 7 60-minute candles. So if we blow this up quickly, you can see. So when we're establishing control, we want to know the direction of the most 2s across each time frame. So if we have a 2 down on the 60 and we have a 2 down on the day, like we did here at around 9:30, it tells you the seller's in control right now, this 60-minute and today. So that's why we use the 60, because if you're trading and let's say you're using a 15-minute or a 30-minute, you could be getting long, but you can be getting long during a 2 down 60 or an inside 60, which is not what we want to do. And for example, notice this 60 is inside right here. And there's actually another good example in this. So this 60 right here, 12:30, you open a new 60-minute. Although you have a 30-minute 2-2 reversal up, the 60-minute's still inside. So although it's green, there is no control since it's neither up nor down. It's inside bar. Another example of that is here. And we had a question about this intraday while we were streaming this morning. So SPY had the hammer, 2 down, 2 up 30-minute here. Why would we not want to do that here at 11 o'clock? Well, because notice the first 30-minute was 2 down, which means the 60-minute was 2 down at the bottom of the hour here. So when this goes 2 up 30, it's conflicted. The 30 is 2 up, but the 60 is 2 down. So we'd prefer not to be taking longs like that. What we are looking for, ideally, is can we take a 30 to create a 2 on the 60? So, for example, we had a 2 up. Is that a 3? Yeah, so this, not the best example since it's a 3-2 continuation, but this was a 2 down 30 triggered by a 3-2 30. And what that does is triggers a 60-minute inside bar down. So notice how that creates the 2 on the 60. That's what we're looking for. We want the 30 to create a 2 on the 60. And the same thing applies to the 15s. So for example, this morning, we had the 2 down. So right here, the 60 becomes a 2 down here. First 15 minutes. It goes green. Then it goes 2 up. The 60 at that point is still a 2 down. So what do we prefer? We prefer the short. So when it goes 2 up in red here, we get a 2-2 15-minute. And the 60 is already a 2 down. So we can short this, looking to take this out. And then if that works, we'd look to take out previous day low. which it did. In that case, we actually didn't trade the 15 this morning. All we did was, once we saw this 60 shooter become in force again, right below 508.2, we said that's a short. So hopefully that answers your question. We look at the 60 because we want to know where that next two is. We don't want to trade things conflicted or that are stuck. Was watching the How We Trade Gappers video. Well, if you watched that video, then you would have seen this. So you could see McDonald's here. Really good gapper trades this morning. So the 15, 2-2 reversal. If you're even quicker this morning, you could have had the 5er in here. 2-2 5er right here. And the one that we alerted over the stream was this. 2-2-30 above 271.79. And you'll notice at that point, 60 is a 2 up right here. Or it's actually a 2 going 3. The 30 is a 2 up. And the day is green. So we have continuity. And then there's right here the 3-2-60, which gave you the outside day, and the rev strat magnitude, which was the mother bar of yesterday's inside bar. So you can see 1 gap down 3 for the rev strat. And for those that are curious, this is something we've been working on, and I'm willing to show it here because we talked about it. You'll see this. So when it comes to the rev strat, we're looking for the 1 and then 3, and it most often occurs on gaps. So this example with McDonald's is this one right here. The 1 gap down buy. So if you pull up that McDonald's, the 1, the gap down, when this goes green, buy. And another one in here is LSCC, which I did not get to trade much of today, but it was such a good setup here. You'll see this. The 3-1-2 reversal on the 30 for the gapper guys, boom, and then the 2-2-2-30 add, boom. If you go to the 60, it was a 3-2 reversal, and then she was off to the races. Thanks for taking the time to help us. Yeah, no problem. Can you settle the extended hours versus RTH? It's more preference depending on what kind of trading you're doing. For the strat, we're never really going to need the extended hours because it's not relevant to our analysis. Because what we're doing is we're looking at the month, the week, the day, the 60 opens, and those opens occur during market hours. They don't occur overnight. So that's what's relevant to us. And when you have extended hours on and you're seeing gaps, let's go like MSTR, for example. So this was a gapper today, and it was one that we just mentioned to short off the weekly break down here. And you'll see this morning you had the slight green to red move, weekly down, and then boom, shooter 60 down for the gapper guys. And if we go and just turn on extended hours, it's not going to really change much for us. If we go here, so if we go in here, it doesn't really change much. The only thing it adds is like, could you have maybe a 2-2-60 or something at the open to play off of? Maybe. In this case, it was a 2-go-3 right here. When you're looking at more liquid stuff like SPY, extended hours is pretty much going to be the futures. So if you're going to do that with SPY, might as well just look at like /ES. Or if you go to /ES, you'll see this same exact stuff. So this morning on ES, you had the 1, I believe that's a 2. No, yeah, so you had the double inside 30, 2-1-2 continuation here at the open. And then you had this small little triangle out 30 and then continuation in the afternoon. The one thing that extended hours will do or will change is at what time the 60-minute opens. And the reason that's important is because normally, if we switch over, so normally for us with extended hours off, the 60 opens at 8:30, 9:30, 10:30, etc. So in this case, SPY is 9 o'clock, 10 o'clock, 11, 12, 13, 14, right? So your open on the 60s can be different. If it's always the same open, it's always opening an hour after each other, that's fine. You can still trade that. But the reason we prefer the bottom of the hour is because most news releases are going to occur at the bottom of the hour. And not every single one does, but most do. So that bottom of the hour flip allows us to capture that when that occurs. And let me flip this back over before we get to the next one. So if we change this over, you'll see Now it's at 9:30 or 8:30, 9:30, 10:30, 11:30, etc. Would you trade ES on the hourly? If I was a futures trader, especially looking for the bigger moves, I would prefer to look at ES on like the 4 hour or maybe the 12 hour. You're always going to have a lot of inside bars and threes. So you can get really good at trading rev strats on that 4 hour and 12 hour or 6 hour, those longer term time frames. And you don't have to do as much analysis. So this is where I'd rather pull up TradingView if we're going to look at that. And I'll just pull up SPX 500. It's going to be the same thing. But it's going to make it a lot simpler, in my opinion, just because you have less signals to worry about. You can trade off the 30, 60, 15 type of stuff. But if you're looking for the big moves, you can see if we go on the 12 hour, for example, 3, 1, 2 reversal here today. Boom, right? And down in here, inside bar up, continuation, inside bar up, continuation, shooter 2, 2, 12 hour, all that type of stuff. And then there's a news event in here. So when you have news events and news releases coming out, it does make more sense to have not just one time frame up, but have the lower time frames up as well. But if you go and just do some look back at the left side of the chart, find a time frame you like. I'd personally go with like the 4 hour, the 12 hour, the 6 hour, something like that. The nightly business report. Tesla, yeah. 212 reversal. I don't know what time frame you're looking at for the 212 reversal, but I do not see one here. Not on the day, not on the week, not on the month. So a little more specific. Oh, unless that's two separate things. Tesla. So like, what are we thinking on Tesla? So Tesla this morning 2-2 on a Tuesday. So this is a combination reversal and a negation. So the Monday open is here, which is the weekly open. When we go 2-2 on a Tuesday, what that does is anyone long Monday has to get out, and it changes the continuity of the week. So this is something we talked about on the stream today. This is a gap up on the week. So just like you trade a daily gapper or 60 gapper, this is a weekly gapper. So a 2-2 on a Tuesday sets this up to start coming back in the other way. So that's something we mentioned today as far as the swing traders are concerned. Below 184.54 short, and then we'll see, do they come back tomorrow to sell again? Because the range just got bigger if we look at our try here. So if this reversal works, we go down there. Obviously, you have a lot of distance to cover first. We have to fill this gap first, but that's what we'd be thinking. As far as a 2-1-2 reversal, explaining that, let me think of it. Yeah, AVGO was an example today of one we took. So more often than not, what's going to happen with an inside bar reversal is you're going to go into new highs or new lows, then you form the inside bar, and then you reverse. So in this case, you can see AVGO. They go into recent highs here. They go into new highs. So when you make that slight higher high, that's short-term exhaustion risk. We form the inside bar. So we have a 2 up in one direction, a 1. And then when this breaks a 2 down in the other direction, that's your 2-1-2. And the same thing happened down here. If we look left, you go into new lows, you form the inside bar, and you break upwards here. That's a 2-1-2 reversal to the upside. And then what we do is we target the other side of the range, try and take out some of these highs back up to the left, which in this case, they go up, and then here's the reversal against. And this one was actually interesting. So this morning, it was a gap down buy to start, and then it reversed 3-2-260, which triggered the day down. So initially, we were looking at AVGO, and we're like, potentially long for the outside day. And then once that changed, we're like, yeah, flip short, because the SMHs at that point were rev stratting the day. So they're failing their equilibrium break higher, which is a whole nother concept. But we also saw at that point, the technologies became an inside day down. And we also saw all the other indexes, SPY breaking 2-2 down, Qs breaking a 2-2 down, Dow Jones, a 2-2 down, was already happening at the open, and then IBM at the open as well. Is the strat starting at a new day, or do you use the day before for the combo sheet? So what we want to do is we want to ask ourselves, what's the next two? What will that negate, create, or do? And what that means is when you look at the combo sheet, you have a magnitude. And since you have a magnitude, you have an expectation of where things should go if they break. So today's a good example of that. So we'll just look at IBM, for example. So an IBM goes 2 up, 2 down here at the open, 198.12. What are we expecting? Well, as long as it's below that open, which means this 2-2 reversal is in force, it's not getting countered, our magnitude's to take this out. So when we look at this, we look at yesterday's move and we say, well, if it goes 2 up, it's a continuation. And if we're not looking at this today, we'll go like this. If this goes 2 up, it's a continuation. We have no magnitude. If it goes 2-2 reversal below this, then our magnitude is that. So what would that negate, create, or do? Well, if we go to the weekly time frame, you will notice it negates the week. If we take that out, the week is now red. It's like, okay, what does that do? That changes your magnitude on the week, because not only is your daily magnitude to take this out, your weekly magnitude is to go rev strat 1, 3. And we're going to pull that up one more time. Notice the 1 pokes up, flips red here, and then back below the 1, that's a short. Your magnitude is this. So when that 2-2 day occurs, it changes what's happening on the week to give us this potentially. So what you can see is we're already halfway there. Your bright red week. So tomorrow, depending on what the news does, if we have big gaps down, we'll finish it off. And if it's not a big gap, then we'll look for new 30-60s to try and take this out. 191.34. So it's always what's the next two? What does that negate, create, or do? And an example of that is MSTR today as well. 2 up, it opens 2 down. It's like, okay, where's the magnitude of that? It's only to take this out, which it's already done. But what does that do? It triggers your inside week down 212 continuation, which gives you a magnitude to take this out. And then you might be weak enough to come back through the rest of these guys. So at the open, I believe last week's lows is like right around here. At the open, when that's in force, now we know the week is trying to go here. And if that works, we go to the month. What could that do? That could take out last month's lows, not much further to the downside, 99600. So we can use the day, week, and month all at once to trigger each other. So when we're looking at setups on like the night before, we want to look for actionable signals, or we're going to do stuff like gaps and whatnot, which already have volatility. So another way of showing this is this morning with the failed SMH long trade. So SMH this morning, we're going to switch over so we have all 4 time frames up. So SMH going into today, we saw the inside day hammer. It's like, okay, if that triggers, what does that negate, create, or do? It would create an inside up reversal on the week. This would be one of the stronger sectors if that occurs. And it did, right? So the first 60 of the day, they attempted to do that. Then the next 60 opens. And then we ask ourselves, okay, if this breaks up, what does that do? It confirms the day up, confirms the week up. If that 60 breaks down, what does that negate, create, or do? Well, 3 2 down reversal. That would negate the day. So what does that also do? It negates the week. So that changes what we know, because now this is not a buy. Right when this is taken out, that is now a sell. So although there was longs in the morning, this changes what we know, negates that, and changes your magnitude. We're then looking for the rev strat magnitude, which you can see didn't have enough time to take that stuff out. But what you would then go and do is short the weaker ones in there. So like AVGO already taking yesterday's lows at that point. That was where the short was. So good setups for a newbie to look for. It's not so much that one setup is better than the other. It's really just looking for our actionable setups, picking one that you can use. The simplest one will be just looking for the inside bar, but you can't go around and just take every single inside bar because that's going to get you chopped up. What you want to do is like on a night like tonight, since we have news and stuff tomorrow morning, I don't have too much to really go after, but let me clear this out. What you want to do is either look for the inside bar or the 2-2 reversal, because those are going to be most of the setups that you can trade. The only other one you would miss doing that would be rev strats. But as far as what you look for at night, we can either look for shooters, hammers, or inside bars. And on a day like today, I'm trying to think if there's any shooters we traded to show you an example of that. There wasn't any shooters off the top of my head here today, but since we have all the earnings tonight with AMD and other chips and whatnot reporting, for example, so you can look for a 2-up in red. This is NVIDIA, and this would be a 1-2-2 rev strat. So that's something we look for, and it's a 2-2 reversal. The rev strat is a really good one because it's a 2-2 reversal, so covers the 2-2s or inside bars, depending on what you pick to trade. And what it tells you is they got long, or they tried to, and then they got countered by more aggressive sellers by breaking up, coming back in. So tomorrow, depends where we open, especially with the news tomorrow pre-market, but if we open and we stay red below the daily open, we'd like to take this out, 833.87. And if that happens, we may go outside weak. So you always want to say, what is that 2-2 going to do? Where is it going to go? Where's the magnitude, which is down here? And then if that works, where's the bigger magnitude, which would be the outside weak for NVIDIA? And looking at the 2-2s that we were trading today, they didn't really do too much. They're Reddit. So Reddit was a shooter 2-2 today, which it worked, closed lower. It just wasn't much good trading. You can see 2 down, 2 up, 1, and then mother bar. The other one was Carvana, which has earnings, so didn't do much else either. But that was part of the IDBM, which definitely had some nice 2-2 action in there. Let me think of another thing new traders should look for. This is a crazy one today. So you can see this is the 1-3 rev strat week, triggered from a 2-2 reversal day. Now, when you're looking to trade and you're like, okay, Alex, why does this big candle happen here? But why does that not happen here with Carvana? The difference between these two setups is previous range and pivots. So you can see XOP yesterday or this morning. When we're looking at this, when that breaks 2 down, first of all, it's a rev strat. Anyone that longed Monday, they get turned around on Tuesday. The magnitude of that is here. The other thing that there is a pivot machine gun. And this is something we picked up on intraday. But you can scan for these and you can look for these. And you'll see this. So if we go look left, you'll see we have 1, 2, 3, 4, 5, 6, 7 candles that have not made a new low. So what does that tell you? Anyone that's long has their chance to get long. They've had 7 days to buy. The other thing it tells you is people have their stops at these obvious pivots here. So when you get a reversal back through this previous range where you have all these pivots right next to each other, that will cause price to speed up. So if you're looking for quick intraday moves, this is what we want to see as far as identifying them pre the move or pre the break. The other thing you can look for bigger intraday moves would be long red or green bars, time frame continuity, which in the case of today, all the indexes had exactly that. So like Dow Jones, you can see the quarter, or if we go to the month here, notice the month on Dow Jones. See how that was bright red this morning? Even though, at like 38302, it was still very bright red. So what does that tell you? Any reversal you get during this month, these monthly sellers are aggressive. So that reversal should go a lot further than the magnitude. And you have continuity. They're selling this month. You can see below the weekly open, they're selling this week. And then when this 2-2 day occurs, since they're really aggressive, it goes further than our magnitude. So that's another thing you can look for is bright red or bright green continuity. And like, for example, the weed stocks today. So you'll see they really took off, and like Tilray, CGC was even crazier. So that's a 2-2 day, right? You have all day to do that. So when this is bright green up into like $11, any new signal in here, you can expect it to go a lot further than its magnitude. So if you go into like a 15, you'll see this is way after the news event. But notice the 15, the 60, the day, the week, see how everything's bright green? That tells you that although this magnitude of this 15 is not very big, it's only to make high day, you can expect it to go a lot further because they're very aggressive. So that there's a signal here and a signal here to get in. You can see it goes 11:42. First reversal against was 13:21, just for the intraday guys. So identifying bright green continuity is another way of doing that instead of pivot machine guns. You're blasting it on the beach. Uh-oh. If it closed with no upper wick, would it still be a potential 1-2-2? So are you saying if it closed higher? Yeah, so when it comes to actionable signals, what we want is we want to know which closer are you closer to a 2 up or 2 down, and is that a reversal or continuation? So when this closes red like this, it's like, okay, that is closer to going 2 down. That would be a reversal, and the magnitude of that reversal would be here. If it closes green, we could say potentially it reverses, but you're nowhere near reversing it at that point. When it comes to like XOP or something, this is where you can identify that pre-market. So when you look at, and this is what I do, it wasn't something we identified pre-market, we identified it after the open. But pre-market, what I do is I load up all the sectors and I just look at who's up, who's down. And then I'll click on those charts and see where would that open be and what would that potentially do. So in the morning, I'm looking at the mark percent change overnight, and you can see we have a ton of different ETFs in here, but XL or XO, I believe XOP is in there. So XOP is not in there, but XLE is, and then OIH should also be in there. Is it? Looks like it wasn't, but if we just go to XLE, same exact thing. You can see it's opening lower pre-market, so center of the range. And then we want to ask, if it's 2 down, okay, reversal. That's an actionable 2-2 reversal. If it's a 2 up, that's a continuation. We'd prefer not to buy continuations. We want to play reversals back through a previous range. So as far as identifying that today, I was doing some scans and I found COP. When it went 2 down day, I was like, okay, all the other energies are already puking right here, 128.8. We want to short below that. As long as it's below that, we want to look to take all these guys out. And you can see puke. Absolutely killed them. But something like NVIDIA going into tomorrow, you also have MU doing that. Marvel's already on its way. I'm not sure if there's any other inside bars that got countered today. And then SMH will be a 1-3-2 rev strat tomorrow, but it looks to be gapping down after hours. Yeah, no, it's a super important thing because this morning, this is what we identified. So we came in and we were like, SMHs, if we're going to see any rally, they would be there. And they attempted that in the morning. It just didn't work. So we stopped out. But what we identified on the indexes in the morning was that IWM is opening as a 2 down. So we know that's going down. We're not buying IWM today. Unless we see all of them 2 up and then this one's a 2 going 3, just not happening. The other thing we identified was Dow Jones right at the open became a 2-2 day. So we knew IWM and Dow Jones are trading lower and they're reversing 2-2 on a Tuesday. And what we said at that point was, we're going to need to reverse the strong stuff if this is going to puke really hard. And at that point, SPY and Qs were still inside day. So the first 60 of the day, they were inside. So at that point, we said they're still closer to 2s down, but they're not a 2-2 day yet. And we need those to do that if it's going to puke. So in this case, once we saw SPY break it, we're like, yeah, short. Same with Qs. Because what that did was it confirmed the fact that IWM and Dow Jones reversed. So it was doing what we already knew was happening, but we had more evidence to take these short after those had already broken than we did to just go in and short off the open IWM or Dow Jones. And the other thing we had was an actionable shooter 60 to trigger that to occur. And if you guys don't have any questions, what I'm going to do tonight is we're going to go through the charts for the Strat attack. And we have a good few of things to be looking at. So it'll be a long Strat attack. If every hour is like a new day, could I just trade the hour alone? So this is the thing. The reason we use 4 timeframes is because we have to gauge participation by price and time. If we don't do that, and we're trading something, like this wouldn't be a good example. Let me see. If we don't do that and we're trading something like, let's see. Let's say we're doing this. So if we're just looking at the 60, what we don't see is the fact that this week down here, it's not very red. So this week, they're not very aggressive. And then what we also don't see is the month here. It's not very red, so it's not very aggressive. The other thing we don't see is this a reversal this month or is it continuation? Because that's important. If it's a reversal, we have reason to believe people have to stop out because price has reversed. It's not going a different direction. So that'll help the 60 become bigger, redder, and faster to the downside. Same thing on the week. And same thing on the day. Is it a reversal today or is it a continuation? So it's important to know the condition of the higher time frames because that'll dictate what the 60 is actually confirming or negating. So when it's something like the indexes, which are just, it was the cleanest trade today, what we can identify as SPY, it's bright red month and it's a reversal. So guess what? Anyone that longed last month, they still have to get out, right? The other thing we can identify today is it's a 2-2 reversal day. So we have a reversal this month and today. So that's even more evidence that this 60 should keep going down. And then the week, this is a rev strat. So that's telling us they tried to buy it up at the beginning of the week, but they are being countered by more aggressive sellers. So all of this evidence here, the day, the week, the month, tells us that we can expect this on the 60. So when we had the shorts down, we're like, okay, well, we'll let them do their thing. We'll come back tomorrow and see what the news has after the morning news comes out and where we're gapping. But at that point, they sold the whole market. SPY, Qs, Dow Jones, IWM, all of that at the same time off the dailies, which told us the 60 can do this. And the reason that's important is if we're inside month, inside week, and then you get this same move on the 60, when this goes inside down here, it might poke down and fly all the way back through because you don't have the evidence that they should continue on the higher time frames. So we always want to know what is the condition of these, and then you can go in there and trade the trend on the lower time frame because we can expect it to. PMG versus shotgun. So with PMGs, normally what you're going to see with them is it's going to have weekly continuity. It may not have monthly continuity. Doesn't mean it can't, but since PMGs you're coming back through a previous range, it's normally a counter. It's a counter trade to whatever was happening before, for sure. So the best ones are going to be like the energies, where they're not doing much on the month, but this 2-2 day PMGs, these guys, which we'll go to XOP since it's a better example. But this 2-2 date negates what the month or what the week is doing. And when that happens, notice you negate the week here with the 2-2 day. And then the weekly negates the month here at 155.45. So you change what's happening on those time frames, and then you stop everyone out. And so when it comes to like a 2-2-2, you're not going to have a 2-2-2 that's really good where the monthly is a doji, because when this triggered on XOP at what 15662, notice how the month was very slightly green. Good 2-2-2 setups are going to happen when you have bright green continuity. So we're going to flip this one to the daily so you can see that better. So you can see this. Notice when this 2-2-2 sets up, the day, the week, the month, see how they're all very green at that point. Then the 2-2-2 occurs here, and you're confirming the fact that they're very green. So could it have PMG'd? Maybe. But the fact that these are so green and going higher tells you it's not happening. It could change. Like when this day goes in force, yeah, that'd be the first sign of maybe that occurs. But since it's so green, it's just going to be very hard to change that because you only have one day for that reversal to do something. But when you have something like XOP where the day changes the week, now you have the rest of the week to try and do that. And then when it changes the month slightly lower down in here, now you have the rest of the month to do that. So you change how long you have and which participants are forced to sell or buy. The Strat attack, we're going to go over it after we get through all the questions and whatnot. And we're going to be doing the scanning live. So those of you, that question, I'll show you guys for what we look for on a Tuesday night. I'll show you guys that. But so when you're scanning through sectors, what you do is you start with the indexes first, and then you go to the sectors. And then once you have the sector with the signal or the setup you're looking for, go into the sector and look for setups within there. Normally like the top 20 holdings or something is where I stick to. Which I'll show you guys that if we have any good setups that we can find tonight. But would you looking for a 1-2-2 week if SPY stays as is for the rest of the week? Yeah, but it's probably not going to do that. I don't want to say 100%, but 99% chance that thing's going outside week. There's almost the only reason it wouldn't is if we gap down tomorrow and the monthly goes green and we're just conflicted. Two going three, what's the stop? This is from the premium chat, but so if it was something like SMH today or Nvidia didn't go very far, but I guess it depends on what you're doing. If you're looking to swing, your stop is the high of the day. If you're looking just for the 2-go-3 on like for going SMH, what we want to do is we want to go in there, and then if it's like a daily 2-going-3, the stop should be a 60 reversal against you at the max. So the day changes to red there. When this goes 3-2 reversal 60 below 217.16, your stop would go here, 218.95. And the only reason we do that is because we have a lot of evidence that SMH should do that. Like we said, when this negated, we're like, okay, the market this morning, most things have reversed, and then all the indexes broke 2 down on that second 60. So when that changed, this 3 became really likely to occur. And what we specifically said was instead of shorting that, go and short AVGO here when this took out the morning lows, because that took the inside day down. So it's already trending lower in comparison to the SMH, which was going up at that point on a daily basis and only going down on a 60 basis. AVGO is down on a 60 and a daily basis. It should be in the scripts and scans section. All of my scripts are in there. And I know I did that for a fact because I'm going to get transferred to Schwab anytime now. It's called Continuity Bar Script TOS. It's like the fourth one from the top. And I have, it's like, let me show you guys this. Right here. Here's the Continuity Bar Script. It's really simple. And you can also get all my scan columns for setups and signals that we're going to be looking at shortly. Anna, Sandy, and Cinnamon listening in from OB. That's funny. Why would one want to see TFC as bars? It's really just a better way of looking at it intraday, and I use it to show conflict and or corrective activity. So, like this morning's SPY, right here on the second 60 of the day. Notice the day, 60, week, they're all red. So you can see that just on this 60 basis without having to look at the week, the month, the day, all that stuff. And it lets you see this. So if we switch to a 15, notice this is what we call corrective activity. So when the day and the week and the month are all red, which the month isn't loading here, I could force it to here. So what we're looking for as far as what is corrective activity, we want a period of control where 3 of these are agreeing. And then the corrective activity is when the other 2 aren't. So you see the 15 is green and the 60 is green. But since the day, the week, the month are all 3 red, that tells us they're still selling, right? This is just corrective. So then what we look for is any actionable signal that can change that. So when this goes 2-2 reversal 15, notice how that starts changing the 15 and 60. So now, since the 15 is a 2 down and the day, the week, the month are already selling, we know for sure that's a short right there. Because anyone that's long here is wrong because these guys are still selling. So you can just see that really easily with this visualization. And then you can see 1, 2 down, 1, 2 down, 1, slight poke up, 3 at the end of the day and just absolutely killed. So 2 go 3 rev strat below 504.56 and then drops like $3 or $2. But can you see that? How very obvious corrective activity. Now, if we go to something like last week, how do you get the big rally last week, even though the month is red? The day, the week, the 60, all green at the same time. Whenever that's the case, this is a period of control. So you can see, Q's was a better example of this. So QQQ, inside 60 reversal, 2-1-2 right here on the gap down. See how everything's agreeing here? That's a period of control. So until this 60 reverses, the 60 day, week, month, these participants are buying. And then it goes all the way up into here. And then your first reversal is like somewhere around right up here, 431. So for $10. And that same thing happened this morning. 60 momentum shooter down, and they're all agreeing. So when this occurs, what we say is like, we have the rest of today, the rest of this week, and the rest of the month. Since the month changes tomorrow, we'll still have the week and day red until the end of the day. But overnight, all we'll have is the week. The other thing we do have now is the quarter. Quarter is red. It opened way up here. So we could say we have the quarter and the week overnight, but the month will change tomorrow, or at least open a new continuity level. But it's really just a great way to visualize that corrective activity and time frame continuity. So if you're like a swing trader or something, you can see this is a period of control, day and week up, and then coin on Monday reversed into continuity down, and then confirmed that on Tuesday, all in continuity down. So anyone that bought last week, they have to start getting out, which is what we looked to do, and they took them all out, making the new low to that. Smaller time frame that you look at. Um, I guess it depends. So I like personally what I like doing is I like just taking it off the daily, especially if it's at the open. If you're going to look to confirm on a smaller time frame, the time frames change as the day progresses because we change our time frame based on volatility. So in the morning, the fivers, 15ers, that type of stuff at the open is what we're looking for. But what you have to be aware of is over time, the decoupling occurs. So if you go to something like, let's go to SMH, why not? So like SMH, if we're marking out the daily signal, when that breaks, we're looking to trade up. We specifically were looking at MU, but if you go into the first 5 minutes of the day, the first fivers are two down in green, no signal, inside bar, and then up. And then it goes two up in red. It doesn't reverse. And then it goes inside and then up, right? So the fiver gets you in. You can also do like the 3 minute. There's a 2-2 3 minute, which stops you out. Then there's 2-2-2 3 minute, stops you out. 3-2-2 3 minute gets you in. And then you had the 2-2-2 against in here. So it really just depends on, are you going to be that guy that's in there right away, or are you going to be more patient? Because what we suggest new traders to do is don't even mess around with that stuff. Go to the 30-60. And the 30, 3, 2 up, 2 down reversal, and just never looked back. So the longer your time frame is, yeah, you may miss out if you're not taking the daily break. You may miss out on the initial move of the day. But the 30 and 60 will keep you out of the morning mess because we don't know for certain what's happening at the beginning of the day because things are coupled together. And what that means is, if we just take a look here, when this opens here at 8:30, the 30 and 60 opens, they're the same. The day open is the same. So at that point, we only know what the daily guys are doing. So we're looking at daily signals at the open. After the first 30 minutes is done, this second 30 will either confirm the first one or attempt to negate it. So it goes 2 up, which confirms it, and then red, trying to negate it, failing one side of this 3. So that was a problem. When we saw that, we're like, okay, SMHs, they're starting to weaken up. That's not good. And then the second 60 of the day opens here. So when that occurs, now the day and 60 opens are separate because the day opened here and the first 60 opened here. This 60 open is now separate here. So when that 60 opens here, that will either confirm the first 60, which traded as a 3 to the upside, or negate it. So when this breaks 3-2 down, now that's negated, and now the day is no longer green. And the second 60 participation group has now negated the day. So they're selling. They attempted to buy, and now they came in and they sold it. Let me think of an example of the lower time frames here. Yeah, so here's another example. So this is MSTR. We had on the weekly this morning, and you see it's on the gap list here with the star next to it. Inside week down below 1201.14. So we want the short. First it goes green. So they tried to buy this. Then it goes inside. Second 30 of the day, becomes a 2 down from the inside 15. So we can use that to create the 2 down 30. And if they're going to sell, now the 30 is 2 down, the 60 is 2 down, the day is 2 down, the week's 2 down, the month is very bright red. So we can do that here to make that happen. And then you get another 15 in here. If you're a 30-60 guy, there really wasn't much you could do besides the momentum shooter 30, which wasn't a reversal. So I'm not going to suggest that. But when you're at the open, everything confirms or negates. So just like that first 60 and second 60 of the day confirm or negate each other, the first fiver goes down. The second fiver right here, that changes what we know. Because the first fiver has the same open as the day. This one's now separate. So they tried up, they break inside and up. This is the first 15 minutes here. The second 15 opens here. Now that is attempting to negate what we know. And you can see that's going to happen over and over until the 60 is done. Because then you have all separate openings intraday. So that's why we say if you're going to trade the lower time frames at the open, you just got to get them and they just got to go. We don't want to hold losers at the open. Because if you bought this inside 5 up, when this 15 changes to red and starts coming back, no, get out. We would want to see this go 2-2 up above that right away if we're going to hold on to that. And then when this breaks inside down, now the day is red. You can't even be long anymore because that changes what you know today, which we're not suggesting buy anything that's doing this, but that's an example of that. So as far as the strat attack is concerned, we can go and hit that. So on the strat attack, what we're looking for is bright red and bright green continuity. So we want to know about things that are following through on weekly or monthly signals. Since we have a new month tomorrow, it does make things a little more difficult, but what we can identify is monthly setups as well. So we can go take a scan at that. But if we're going to talk monthly setups tonight, what I don't want you guys doing is right away in there and just shorting big on Monday or longing big on Monday, depending on what they do. Because, or not on Monday, on Wednesday. Because the monthly decoupling still has to occur. You have to decouple the month and the day, which occurs on Thursday. So depending on what we do tomorrow, that will either be confirmed or negated. So we don't want to go in there and just short bet the house against the market on day 1 of the month. We want to let them open and give us that bright red continuity. But let's get into it. So since we know the market's selling, we want to look at first who's 2 down to start the week. Because if we're going to have a bright red week that closes at the lows, opens at the highs, what they're going to do is they're going to come in Monday and sell. Then they're going to come in and sell more Tuesday, which tells you that they have more to sell. So these are going to be all the things that are 2 down to start the week. And what I want to look for is there a concentration? So it's like a lot of communication services, a lot of information technologies, a lot of consumer discretionaries, a lot of financials, and you got some mixed in energies, industrials, materials. So I would want to go where we have the most evidence, which is going to be the most names doing that. And ideally we would have some like shooters or momentum shooters to have signals into tomorrow. But what we can do is just start tabbing through and see who's doing what. So we know the energies this week definitely are getting killed. And let me get this correct here. So I'm just going to go through and just take a look. So we can see Slob is 2-2 reversal week. COP is a 2-2 week. And notice these are closer to setting up 2-2 months down tomorrow. So this daily PMG sets that up into the rest of the week. Fang, not a 2 down week yet, but closer to a shooter month. KMI, 3-2-2 week, nowhere near a monthly 2. NEM, inside week. WPM, inside week. NUE, steel in the materials, closer to a 3-2 month. That's no good. Same with X, closer to continuing that month down. So we're just going to keep going through. And what I'm looking for is I want to see signals back through previous range. And so like, for example, love. Here's the 3-2 week. They sold Monday, Tuesday. If they did that with all of the airlines, this 3-2 week could get a lot redder. And since this month is going out on the lows, it's going to be continuation next month, and this is all continuation. So it's not the best thing in the world to be looking for stuff later in the week on. We want to have reversals, ideally. UAL could have a 3-2-2, so maybe go to DAL, nowhere near it. Alaska Airlines could be a 3-2-2 as well. So you can see potentially 3-2 down love and then 3-2-2 ALK and UAL. Let's keep going. Board is a 2-2 week, closer to a 3-2 monthly PMG, so that could be an issue. And you have the week in force till Friday. What about GM? Still an inside week. Nike, this is something we'd want to know about. So Nike's from the white girl stock list, right? They poke up, slight triangle out. And they had the slight lower lows to this stuff. So here's your try. These two outside of that. 2, 1, 2 reversal. And the month is no shooter or anything, but the quarter is a 2 down. Go to the year. The year would go inside down if we can take this out. 88.66. So below 92.44, I'd want to know about that the rest of the week. So something like ALGN here. So notice it has a 2-2 week. Does have a 2-2 month, which we're not going to have tomorrow since the monthlies change. Could confirm that. It still has magnitude to take these guys out. But they sold Monday, came back Tuesday to sell more. And this week lasts all week. So potentially that could get a lot redder. If we go in here, notice they just all day got after it. So when we see this, we want to look for small triangle outs on the 30-60s and see if they can keep going the rest of the week. And that tells us at least one healthcare name's doing that. Looks like we only got 2 on the list, so it's not really a simultaneous break in there. Bank of America, closer to 2 down. Wells Fargo, 2-2 week. MasterCard and Visa. So this is something I want to know. Visa had the 2-2 month last month. 2-2 week shooter in force. They sold Monday, came back Tuesday. MasterCard, which is the same sector, inside week down in force. They sold Monday, they came back Tuesday to sell more. Also had the 2-2 month. So if they're going to continue next month, these are already at the lows. We'd have to look for some corrective 60-30s to get in there. But we know they're selling that for certain because they're confirming each other and they're very red. And the rest of the financials are relatively flat. Besides coin. So coin is definitely on there, and you can see this is from the observations list here today. They sold Monday, came back Tuesday to sell more, have the inside weekend down. Closer to an inside month down. along with MicroStrategy, 2-2 on a Tuesday, and they really got after that one, confirming coin. Along with CLSK, they sold Monday, came back Tuesday, took the week 3-2-2 down. So those are all confirming each other. Mara, not quite yet. And then Riot had earnings tonight, I believe, or is that a different day? Conference call 5-1 in the morning. So they have earnings in the morning on Riot, which is something we'll want to know about on the gap list. But ACN, that's no good on the quarter. MongoDB, inside week. Adobe 3-2 quarter, that's a problem. So Autodesk, they sold Monday, came back Tuesday. They have the week enforcing down, confirming a quarter enforcing down. With W Day, they sold Monday, Tuesday, which is also down in here. So we have Autodesk, Adobe, W Day. And these are just infotech names. FTNT, you can see that one's not doing quite as bad. GitLab, nothing. Monday, Tuesday, yes, but they're not taking the week down yet. They do have the quarter enforced down. Below that, Microsoft. Monday, Tuesday sold off Microsoft, so that's a problem. Not quite a quarterly reversal yet, but they're pretty close to potentially doing that next month. And there's some short-term exhaustion down here. Now, also Monday, Tuesday, so we can definitely pick out the technologies. A lot of technologies are coming down, and that's systems software. ASML, semiconductor materials closer to week and down. TTD. Google, they're selling the gap up along with Microsoft. And that's the bottom of the nightly scan list. So what I would pick out is pretty much what we have here. So I can pick out the fact that we have financials. We'll go like this. So we know we have infotech. Specifically system software from the look of it. And then we have just normal tech up here. Financials, there's going to be Visa/MA. Google, Microsoft. And I don't really need any more than that. So as far as Strat Attack's concerned, this is the list. The one that we don't have on there is Crowd. It was a 2-2 day today. And this was something we talked about in the weekend vid. Inside a week, it gaps up, though, in the magnitude and then flips red. So we get the 2-2 day on a Tuesday for the weekly gapper to go 3 on the week down here, 280.85. So that was one we had today and didn't have it off the daily break, but here on the 30. Inside 30 down below 299.5, went out at the lows at 292.5. And then we already covered all the coiners, that type of stuff. And then truly with the turnaround Tuesday, all the indexes are also fair game. Very red on the week. And that's be something we want to know about with all the earnings or all the gaps tomorrow. And when it comes to the Strat Attack, we don't want to just go in there and short willy-nilly tomorrow if things become 2 downs at the open, especially if we gap down, which I just have a hunch we may do that. So what we want to do is, let's say things all gap down tomorrow. Let them go 260s up first, because if they're really going to puke them, they'll go 260s or 230s, something like that. Because when you have a gap down that's going to sell, you need people to buy it first before that gap down turns into a really big sell. And sometimes it'll be on like a 5 minute basis, but more often than not, especially if it's most of the market, you're going to need more than a 5 minute, probably like a 30-60. And then as far as actionable setups, what I would note is NVIDIA with the Rev Strat. So we can go like this. NVIDIA is a 122, MU is a 122, and then there's going to be ON. ON is a 2-2 shooter, and it's mostly going to be in the semiconductors, SMH. And if we go and then take a look, we can also scan and see, are they buying anything? Which is a good thing to know. And it's really going to be weed stocks today. That's the one thing that we have some news on for the story stocks. We can go like so. So if I show you, these are the two up to start the week. See how the list is much smaller. So not quite as much. And then notice a lot of two up in reds. So a lot of these could reverse tomorrow. So not much strength per se. I'm just going to go through the big gainers as far as I can tell. Let me change this to percent actually. And what I'm doing is I'm just looking at the percent increase to the open. So if I look at something like YPF, you can see it's a 4% increase. So it shows up on my scan as up 4%. And they bought Monday, Tuesday, but they're going right into recent highs here. So we can identify they're buying that, but we don't have magnitude. If you go like XOM, see that's much closer to reversing tomorrow. So we can go into this and see VKTX and healthcare. So they don't care what the rest of the market's doing. They're just buying VKTX. So we can identify that. LLY is a gapper today. NVO is also not a gapper, but looks like some news overnight. I'm interested. BIIB inside day. That's when we were trading on Monday, but SMCI earnings not very good. 767. That's something I want to know. So when it comes to looking at gappers here, you can see 2-2 day tomorrow with SMCI will be a gap down, but it's going to open like 767 ish, depending what they do in the pre-market. So if they open around here, we could still go 3 on the week here. And then what could they do next month? If they go, depending on if they go 2 down again, we still have magnitude here. So that would be a problem for SMCI. And then we also know AMD will be a gapper tomorrow. So SMCI, AMD, and then I believe Amazon's gapping up. So it was gapping up, not so much anymore. That's not good. This is a 2 going through week. Same thing. Gap on Monday, gap sell week, 2-2 on a Tuesday. And we'll see what that's going to do. But that will be important. SMCI, yeah, down in the drink. Let's see. Yeah, so there's really not too much on the bullish setup list as far as we're concerned there. And what I then want to take a look at is just the sector basis. So we're going to go like this. And I want to show you this. This is important. The simultaneous break that occurred today when we mentioned that on Twitter in the morning. What does that look like outside of just the indexes? You'll see this. Whoa, that's a lot. So when the indexes simultaneously break, XLK inside down. XLV was a 2-up red, so still an inside week. Not really selling off healthcare, so you can identify that. XLP still much inside week, so they're not selling off staples, which could be a more defensive posturing depending on what they do tomorrow. Transports 3 days inside down. XLY, which is like your Tesla and Amazon, 2-2 down. Communications 2 down, 2 down. Utilities, that one still holds up strong, so we can identify still that's a defensive posturing, utilities and staples. Then materials 2-2 on a Tuesday, back down. And if we go in here, financials 2 down, retail 2 down, energies 2-2 reversal. See how that much bigger range. Biotechs also holding up a little stronger with the healthcares. Home builders 2-2 back down. Semiconductors 2 go 3. China names 2 down. And then you have the SPY here 2-2 and just killed. So going into tomorrow, are any of these near reversal up? Not really, right? So like the only thing that could maybe reverse biotechs and utilities wouldn't be a reversal, it'd be a 3-2. So between biotechs and healthcares, there's really not much that is still strong. Most things had that reversal simultaneously today. What we'd want to see is if healthcares can reverse tomorrow, which would help it out. But the thing you won't have is you'll have an inside week, so you're not going to have a weekly too. And even if the biotechs continued, those would also still be an inside week, I believe. Nope, actually slight 2 up, so those could still go outside week. So really, it's like, how are you going to reverse this on SPY? That's going to be really difficult. And these charts do not have gold on them, so we're going to go like this. Gold also did not fare very well today. So on the monthly, this might change what we know here. Shooter on the month. It could also just triangle out and go 3 if things go back into the safe haven stuff. Silver, similarly, you can see you had the really big move up, inside week down, and then they did not reverse that. They confirmed the downside going into, obviously Monday was a 2 down, but also Tuesday. Gap down and 2 down. So silver and gold, you got a lot of volatility in there as well this week, which wouldn't be, it would be a Strat attack name, 2 down silver, but we'll just have to see. Normally they gap a lot more, so it's more than likely going to be on the gap list. So going into tomorrow, we'll have the gappers, which we'll get in the morning. But the Strat attack is going to be all of this stuff to the downside. And what we want to do is called disseminating the gap, because tomorrow's more than likely going to gap. So tomorrow morning, if everything's gapping down, the first thing we look for is who is gapping up, which sounds weird. But what that will do is anyone short into the gap down. It's like, let's say if you traded SPY today, you got short, right? At least you should have. So they're short into this news. And we talked about that. We're like, as far as we know, whatever people do today, they're doing it in anticipation of the news tomorrow. So tomorrow morning, anyone that's short in this, either they get what they want with the gap down, and that's good because they don't have to close then, or they don't get what they want and it goes up. So if everything's gapping down, they're getting what they want. Market's going into new lows. The things that are going 2 up at the open tomorrow, either with a gap or just opening and becoming a 2 up, that's where these shorts here do not get what they want. because we can definitively say they pretty much shorted the whole market today. So anything that's not doing that is where we want to be first, because that's where they're going to have to buy to close and you'll get a short squeeze at the open. A great example of that from a while ago, last time we had some big moves like this was, oh crap, what's it called? Was it Path? Was not Path. It was a material name. I'd have to go and look. I can't recall the ticker name. Let me think. I could have sworn it was Path. It wasn't that long ago. Hmm. Let me think if I have another example of that. There really hasn't been many that we've gotten recently. I don't know. Macy's a while ago was a decent example of that, but it wasn't the biggest move. It was this. So you can see 319. See this big spike up in Macy's. Off the daily 2-2, this is something we traded into daily mag. So on 319 SPY, notice on 319 SPY, see how it's a gap down. So anyone that got short this day here, because it closed red, we could definitively say someone got short, or at least someone sold. When this gap's down, they get what they want. When it starts coming back, they're forced to close, which gives you the gap down by 3. So the strongest things are going to be a 2 up at the open. So like something like Macy's, this thing, it did that whole move. Really, it was like within the first 30 minutes. Did the whole entire thing. So that's where the really, really big moves are going to come in. As far as, I'm trying to think, there was another one in there. It just was too illiquid for us to trade. And it was the same, it wasn't Path. Was it like PS or P? Let me take a look at my materials sector list and see if I can pick it out, because it's the best example of what we're looking for. IP, there we go. So this happened on that same day right here. So IP, notice 319 right here. Anyone that shorted the SPY the day before, it gaps down. They get what they want. IP opens inside. So this wasn't something we could find right away. But when this went 2-2 here, that's when we want to know about it, above 36.60 or 36.35. You can see, boom, short squeeze. Anyone short into this stuff, they get killed. The other positive thing here is you can see you have the pivot machine gun, where as those shorts are getting squeezed, you're also removing liquidity from the market, because each pivot you take out causes people to stop out. And when that occurs, they buy, which removes liquidity from short sellers trying to buy and close. So it speeds things up even quicker. And if we look left, they also took out all the pivots to the left here, which caused this gigantic short covering rally. And then look at this, 2 up red and then killed back in sideways and then back down. So this, as far as what we're looking for, this is what we're looking for. Whoever's really short, that does not get what they want. And then after we do that, first like 60 of the day, then we go in after the first 30 to 60 minutes, and then we go in and we trade. If SPY's a gap down, we can go and trade the SPY and the Qs and other stuff. If it's recovering, then the things that are 2-2s, they're going to keep going. And if it's continuing down, we'll have inside 30s, 60s, 15 or 2-2s, all that type of fun stuff, simultaneous breaks and whatnot. So that covers what we'll be looking at for the strat attack, and then what we'll do tomorrow morning. And if you guys have any other questions, you can ask those now, and I'm going to be looking at the chat. Starbucks at all? No, it's from the macro vid, so you're getting what you want if you shorted it at the beginning of the quarter in here, but 90.22. The only thing is, I was waiting for it to set up again since you had the weeklies 2 to the upside, and with the earnings, they just slapped it. But what's good here is we don't have to really gamble on the earnings if we don't want to. If we had a winning position, we could leave that, If you got it in here, covered some and then left the rest, that's fine. But now, if we go to the quarter in the year, inside year down below this, so that was in force into the earnings, 78. So you're still going to have 78 to 68 and then 68 to 50 for the other side of this outside year. So the same thing on Starbucks. You want to let it gap down. It's probably not going to be a gap down buy. You're going to be nowhere near coming back into this previous range up in here. So let them try and recover first and then smack them the other way. They may just do it all in that gapper day if they really want to get out of Starbucks. But normally what happens with the gaps is you'll gap down. You'll normally get an inside day a couple days after. And then that inside day will give you the direction, either confirming the gap down or negating. The sector column is not custom. It's built into Thinkorswim. So I can pull up, this is like, we're in my sector space, so it's going to have my sectors, but the sector column is not. You can also add sub-industry, and that'll give you the sector and the sub-industry. So like you can have the semiconductor sector, but you can have material producers for the semiconductors, which is its own thing. AVGO potential rev strat. Is it gapping? No, this is an inside down reversal, and we're gonna look for a 2 down tomorrow again, because that's also gonna be gapping slightly lower. But as far as a rev strat, you'd have to take this out, 1348, and you're almost $100 away from, or $60 away from doing that. What would you look for to definitively get out? A 2260. If you're a gapper guy, uh, a kicking pattern. Yeah. Let me think. I want to show you. I want to give you guys a good example. So I'm going to pull up my YouTube video, and if you want to, you can go and watch that after. It's going to cover all the patterns that there are, but I'm going to pull it up specifically for the examples in there, just so you have good examples to be looking at. But let me see. And take out this high here. That is the trigger of the 1 bar rev strat. And then they take this out. We then have kicking patterns. This is the bullish kicking pattern. So a kicking pattern is going to be, you want 80% or more of the same color. You don't want big wicks, because you want it to open at the highs, close at the lows for a bullish kicking pattern. And then the next day, you want to gap fully above that range. Because what happens is this bright red bar, anyone that's long, they get out, because that's a really, they get out. They're stopping out. And then that means anyone that wants to be long, they're sidelined. Like they just have to sit there and wait, because price is going down, they can't buy. When this opens here, anyone that was short, which they did get short because they shorted from the open to the close of the day, they sold. Everyone short has to start covering as long as this is a green bar. If it's above this open, it's in force, meaning that kicking pattern, you should close higher as long as you're above this daily open. And your stop is the low a day here. So the second that's green, you buy, stop low a day. And you ideally want to hold all day, because if they're short covering and people are now entering the market to buy because now it's going up, they should do that all day more often than not. And it's one of the strongest reversal patterns you can get because of that. We know people are trapped. We know longs are not in there. And now we know longs are buying, and we know the shorts have to get out at the same time. So you get a much bigger move. So that's what you want to look for. And then the bearish kicking pattern, same thing. Goes into the highs. Anyone that's long, they're long, right? They bought from the open to the close. Anyone that wanted to be short, they're stopped out. So when this goes 2 down, now the shorts can enter. And anyone that was long into this has to start closing below this. So your stop is the high a day, and your entry is whenever this is red. It may trigger a couple times. And the example here is MU. So if you go to MU here, or not, I think it was Marvel actually, my bad. Or that was actually Costco. Here it is. So this is an example. So notice it's going into the highs, right? So if you wanted to be short this stock, you have nothing to the left to be short against, because what people normally do when you come back through a previous range, we pull up a whiteboard here. And I only got about 20 minutes and then I have a meeting. But so this is why we want to trade back through previous range. So we all know the broadening formation phenomenon occurs, right? So you get the broadening formation. When you're trading back through this previous range, what people are doing is they're buying, trying to get longs to go higher, and they're putting stops here. And then they're buying more, and they're putting stops here. And they're doing that the whole way down because everyone's trying to buy the dip, right? So when you have a kicking pattern, what happens is this. So you have the broadening formation, you're going into new highs. So first of all, you're going into new highs, so you're at the top of a try. And then it gaps down into here. People trying to buy, they're going to throw their stops at pivots. And anyone that wanted to be short, they couldn't be. Because if you're short, you would be short against these highs and they were already taken out. Or you were short here and they took you out. Or you were short here and they took you out. So now they can get short, and anyone that was long into this stuff, they also have to get out. And you're going to target to try and take all this stuff out in one go. So if we go to something like cost, it's going up for multiple days and then kicking pattern. This is the strongest reversal. Notice it opens at the highs, closes at the lows. So you want to short the open, buy the close. And if we go to Marvel, same deal. Kicking pattern, notice going into the highs. So if you wanted to be short Marvel, you were short against this. See how you take them out and then squeeze? Now, here, when this opens here and it's below the open, that's a 2-2 reversal and a kicking pattern. These guys all have to get out. And you're going to target all these previous pivots. And notice it opens at the highs, goes out at the lows. So you short here, buy the close. And in this case, we actually said we want to hold that because it sets up a 2-2 week right here. And then when the next week open, here's your inside day to confirm it. And then that gave you an outside month here if we open it up. You can see 2 up red month gets negated and then 3 into here. Boeing, great example of a gap sell on Boeing. It's last week, but gap up. What do we look for? 2-2 back down. Boom. So if we go into like the 30-60s, 2-2-30 here does not work. You stop out. Corrective 30, 2 up, 2 down 30 here. Try again. And then they're killed. Boom. And then another 30 here, killed. And then another 30 here, killed. And then here it is, changing daily continuity back into the previous range. But as far as Boeing right now, inside week. So we don't want to trade ones, we want to trade twos. And if you're looking for twos, they're all here. As far as the higher time frame is concerned, if that goes, let's say 3-1-2 next week, here's your big try. If we go to the year, 2-2 years. So it's trying to go and take these guys out. Below 176.25, 113.02. Maybe we can take out 89 if they're going to let all the doors fly off the planes continually. A kicking pattern is a gapper. It's one of the gapper setups. And if you're someone who can be patient and just trade like one thing and trade, I would say kicking patterns are the way to go. Because they work almost every single time. Rarely do good ones not work, but KO. Coca-Cola. So it's a 2-up week, so it's not something we want to short this week. It is green on the year. It is quarterly 3, so don't know what they're going to do the rest of the quarter. It is also a 1-3 hammer month. So next month above 62.83, that could be a buy. Since it's an inside year, we just got to be aware that this is a broadening formation in here. So like we're saying, we want back through previous range. So if you're a Coca-Cola guy, 2-2 day down in here, back up through previous range. And then notice, anyone that's short, they're stopped out above these guys. So we don't know. We're going into recent highs. If we were going to get a buy or something, we'd want to let them draw back in a little bit and then set up again. But going into next week, if it were to close like this, we'd look for a 2-2 back down. Han. What about it? So Han was a 2-2 month, pretty much hit its magnitude, missed by like a couple cents, but inside year, doing nothing. Yeah, so kicking patterns, you can either do is look at after hours and pre-market, the gaps, or what I do is I have a scan that identifies them for me. It doesn't identify the gaps for me, but it does identify the kicker. So, and if you want this, go into the Stat Discord. It's in the description. It's my nightly scan. You can scan for anything. So what I do is this. You can see I have the calculations for the body, the range, and all of that, and then the kicking pattern. I'm looking for a kicking pattern with a kicking percent above 0.6, which normally I think that's 0.8, but I just left it a little bit wider. And then what I would scan for is a bearish kicking. So a bearish kicking, it's not a bearish kicking pattern, but it's a bearish kicking bar, if that makes sense. A kicking pattern is a 2-bar pattern. A kicking bar is a 1-bar. So if I just looked at bearish kicking, it would give me things that are closing out at the lows. So if you look at the nightly scan, you'd see this. So these are things closing out at the lows. So I'm just go and take like Amazon, for example. This is a bearish kicking bar. So it's opening at the highs, closing out at the lows. And then tomorrow, what I would do with that scan is this. And then I would sort by mark percent change. So I'd add this into my scan here. And I'd say, give me the ones that are up after hours or pre-market. Once the day closes, this will actually have, or not once the day closes, tomorrow morning, that'll have like the actual kickers up at the top. But you want the ones gapping the most up. And then what you want to look for is, are they opening above yesterday's range? And as far as that analysis, we have to do it in the morning. So I'll have it posted to Twitter if I see any good ones. But the most important part is just, is it confirming or negating what you know? So when the whole market sells off, look at the kicking patterns up and vice versa, because that's when you know like people are really trapped, and that's what we're looking for. You had extended hours off. You can't use the 60 signals in Thinkorswim if that's what you're looking at. Do you make calls in your Discord or just guiding in terms of which tickers are doing what? So our goal is to teach you how to do it. So we want you to know how to do the reversals, continuations, like what are you looking at, time frame continuity, all the analysis, because once you learn the strat, we're all looking for the same thing. And if we're all looking at the same thing and we think the same way, then in the morning, like this morning, I don't have to say like, I'm going to get short here and my stop's going to go here and this is my invalidation and blah, 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 blah. I can say, hey, SPY QQQ 2-2 day confirms what we know to be true, 2 going 3 week, and you know exactly what to do. You know to short the 2-2 day, and you know it's a 2 going 3 week, trying to take these guys out down at here for the rev strat. So we're going to say that. We don't have to say anything else. And we do that because it's quicker, and we also do that because if you learn this stuff, you can do it yourself. You don't need us, but we prefer to have you. And as far as like called out ticker setups and whatnot, we do have gapper alerts. So in the morning, Elaine is going to alert all the gapper setups. So the inside bars, 2 down and greens, etc. That type of stuff. But I will say like what we're going to be doing pre-market. So like this morning, we're like, all right, potential 2-2 days across the indexes. And then what we want to look for if the indexes are going to reverse is who's taking last week's lows. So we're looking at MicroStrategy to short under last week's lows. We're looking at coin because that confirms MicroStrategy short under last week's lows to take these guys out. And then we were looking at potentially like CLSK as well, which was a later one that we mentioned. And then we were also looking at maybe longing the SMHs, which was a failure. And we mentioned that when the second 60 changed, we're like, yeah, we're exiting that, not holding on to that. And then we also mentioned the shorts to make your money back if you got stopped out. It's like AMAT. We mentioned here on the 3260, we're like, here, this is where we can get short because this is one of the weaker ones, 3.2. And if you know the tickers and you're with us, you also know you can go to LRCX, which was a 2.2. And you can see they sold all day. Please hit that like button. Yeah, thank you. If you sign up to the Strat group, will you get an explanation of how to use the scanner? Are you talking about the website? If you are, we have, and this is something soon. So if you guys are interested in Stat, you can be patient because we do have a good offer coming soon to you guys. But in that offer, we will have information on the scanners and all of that fun stuff. But if you want a quick little rundown, what we're looking for is first over the weekend, we look for our actionable setups. So we mentioned over the weekend, we're like inside weeks across everything. So we already know we're either going to have a 2 up or we're going to get a rev strat. So we can scan and say who's inside up, who's inside down. How many of those do we have? So if we go and take a look, and this is how I use it as far as doing my analysis and whatnot. But if we go and take a look, we can scan on the week and say, okay, who's bullish in force? And you can see right now, technically 14 names are bullish in force. Most of these are actually gappers that just took the weeks up. And then we can also go on the bearish side and say who's bearish in force. And we can see there's 66 names to the downside. So instantly we know more things are going down, which gives us the bearish bias. And when we're scanning this, as far as who's doing that, we can also scan like the potential threes. Since SPY went 2 up in red week, we can scan for a 2 up candle on the week. And we can scan for continuity down, which gives you all the potential threes with continuity. So you can see these are all the 2s going 3 on the week. So every single one of these is a potential short trade, which might be too much for you. And if that's the case, that's where we suggest sticking to either like one index or one sector, because if you're looking at just like the Dow Jones, for example, it's only 30 stocks. If you're looking at just the NASDAQ, that's going to be 100 stocks. So you can pick out and get the size that you're looking for. And then the Russell's like 3,000. So there's a lot of different ways to do that. As far as setups and what we're looking for, Monday nights, we're looking for inside bars and we're looking for rev strats. Over the weekend, we're looking for 322s, inside bars, rev strats, all of that type of stuff. And same with Monday nights, 322s as well. And then what we're doing is we're scanning and we're saying like, if I wish I could show it today, sadly it clears all the setups, but we're scanning and we're saying like how many of those setups are going in either direction, because that tells us our bias. So like this morning we saw all the semiconductors were taking dailies inside up. So like we're like, okay, we're going to try and buy those to start. And if it fails, we'll go and short the things that are not doing that, things going down. So it's not like you can just scan and then only trade that setup, although you can. What we do is we scan and then we'll trade in the direction of the whole market and wherever those are going. So we have a plan for the upside and a plan for the downside. So like today, semiconductors were the upside plan. Downside plan was all the Bitcoin stocks. And the other downside plan was shorting the 2-2 day on the indexes, which we posted on Twitter. In force, in force means it's happening right now. So like if a shooter is in force, you're below the signal trigger and that candle that triggered it is still open. If a hammer's in force, you're above the hammer trigger, the candle's still open. If a rev strat is in force, like a 2 going 3, all that is a 2 down in green back into an inside bar, or a 2 up in red back into an inside bar. So hopefully that answers your question. The candle has to be open. Once it has closed, it's no longer in force. And we'd call that signal exhaustion, when the signal is no longer in force. How often do you go live? Tuesday through Friday, most Fridays. Some Fridays I do not. Last Friday I did not. But I would say like 3 out of every 4 Fridays I am live. So it's, and then on Monday we have Sarah's live, and on Wednesday night Sarah does Stratucation, which I kind of overlapped with her, so I feel bad if I took people away from Sarah. But C1, C2. So this is gonna be, CC is the current candle. So like today, at when the day is open, the current candle is whatever the current candle is doing today. So during the day, we're scanning. We're saying how many things are 2 up day, how many are 2 down. And if I could, which this is something we just have to do, I'd also want to scan if the colors green or red, so we know if they're 2 going 3 up, 2 going 3 down, etc. But like for example, this week, current candle, how many 2 downs do we have this week? 66 2 down weeks. So these are the weakest things in the market because there are 2 down. Well, the rest of the market's 2 up and red. If we look at 2 up weeks, 245 are 2 up, right? But if we scroll through, notice they're all red for the most part. Very much. So what that tells us is they tried to buy all these at the beginning of the week, and now they're getting it handed to them. Nightly scan to Thinkorswim. It's a custom scan script. So what you want to do is you want to add filter, study, and then click this little thing here. Or you can go and scroll left, click on the study, and then custom. Go into ThinkScript editor, and then just copy paste. And once you copy paste it, you should have all these. So what you're going to want to do is, first of all, ThinkScript is not hard. So if you're looking at this, you're like, what does this mean? It's like reading English. So it's like define shooter. It's like, what's a shooter candle? Well, the open is less than the shooter top, which is just a calculation I do to make sure that it is a shooter below the, 70% below the top 70% of the bar. So opening or closing in the bottom 30% of the candle. So that's a shooter. So if I'm scanning for shooters, I just type in shooter, and this will give me all the shooter days. And then the same thing for all of this type of stuff in here. And what I'm normally scanning for is, I'll scan for each day. I'm looking at the inside day lists. So I'm looking at who's inside and 2 up and closing over yesterday's highs, which would be in force, closing above the 1. I would also add like green on the day, but you can also do inside and 2 down. So who's breaking 2 down? You can also add to that like and closing under the low, and maybe red on the day, which I have that defined here. So I could say inside yesterday, 2 down today, and closing under yesterday's lows, which we know, and red. So it's 2 down, under yesterday's lows, and it's red. And it was an inside bar the day before. So that's an inside bar down. And we can do the same things scanning for anything else. So like if I'm looking for a rev strat, I can scan like an inside bar 2 days ago, and a 2 down, and a 2 down yesterday, and closing above the inside bar lows. Something like that. Or I can do just and a hammer for the 1-2-2 hammer. So like today we had inside bar from Friday, and let's say a 2 up on Monday. Or actually we'd go like this: inside Friday and a 2 up on Monday, and a shooter on Monday, and a 2 down today. And that'd give me all the rev strats that went in force to the downside today, which I don't know if there was any. I didn't trade any of them. Maybe if we clear the filter, there might be a few. Make it a simpler one. Yeah, so there's 1, 2, 2s. There's a ton of them. So if I go and scan now, I can take a look. Look at tap. 1, 2 up, 2 down rev strat. So what you can do is you can scan not only the setups for the shooters and whatnot, which I'm not sure if there was any shooters. Yeah, it looks like there's a few, but they're over the counter, at least from the looks of it, or at least names that are nobodies. But then you can also scan and say who's in force. It's like these are a ton of nobodies in here. So what I can do is I can do that previous scan before, look for the 2 down, and this will show that scan, or this will show that list right at the open if I scan anything that breaks that 2 down. So then I can save that and say rev strat down. Daily time frame. So I can save that, and then that's part of what I look at on the screens during the day. So I'll pull up my trading workspace and show you that. It looks like it's 6:02, so I'm gonna have to leave shortly, but I'll show you this. So like, for example, I'm looking at who's inside an up SPY. That's just looking inside bar, breaking 2 up. And you can see not all of these did much today since the market was down, but then we can also go and say who's inside down SPY. So here is all the inside bar breaks lower. And then what I do is I just filter it by performance from the open, so we can get the reddest ones. Because the reddest ones at the open normally get redder. So if we just filter up into here, MGM was one.
Hello.
Oh, I forgot today's Tuesday.
Who are you talking to right now?
Yeah, Tim, I can't hear you. I don't have my earbuds in. But MGM, you can see the inside bar breaks lower. And if you miss that, notice at the open, they get killed, right? So there's an inside 5 here to confirm that if you're quick. Later in the day, this is where the 30-60 stuff you'd want to be trading, which in this case, it just trends all the way down. And then they had the 1-3-2 reversal here for later in the day shorts, but it goes out on the lows. If we go and take a look, PSX and the energies, you can see this one also killed, and the 15er 2-2-2 in here gets you in. Yeah, so what we would say if it's not enforced is, okay, it's still a 2 up, which means the buyers are in control. Because if it's a 2 up day, they tried to buy it, right? So that buyer is there today because it's a 2 to the upside. It can get countered, but you'd need a 2 down 60 to be short. So, and this is just a universal truth. It has to happen this way. So when it comes to like SMH, the only way this becomes an outside day, even though it's a 2 up here and failing, the only way that happens is if this 60 continues to be a 2 down. If it reverses, we no longer think this is going outside day. So when it goes 3-2-2 or 3-2 reversal, now it's going outside day, unless that reverses. 2 down, 2 down, 1, 2 down, 2 down. And then it goes outside. So in the sense of this hammer, it's not enforced. So we can't be long off the hammer if it's not above 218.61. So when this failed in the morning, we were like, get out, right? And we didn't do it on the 60. We actually did that here. When this 2215 came in, we're like, all right, we're getting out. Because at that point, it's just no longer in force. It's not a signal in force. The one that we were trading specifically was MU. And we were on the right one because it was much stronger than the rest of the market. But you'll see this. So we had the inside day up, 114.75. So we buy that here. 2 up, 2 up, 2 up, 2-2 against, get out. Closing for a gain or slight loss. I think I lost like $20 or something because I tried to get an ad in there and it just didn't go. So that was it. And then if you're trying to make your money back, instead of shorting this stuff back through, because it's going to have to be a 2 down 60 all day, if that's going to work, which you can see in this case, 2 down, 2 down, 2 down, 2 up, but fails to 2 go 3, and then 3 2, and they take some of these guys out. We'd rather just go to the 2 downs first, because that's where the selling's occurring. AVGO rev strat potential? No. In order to rev strat, you have to take this out. You are nowhere near doing that. This was an inside day short. And yes, like rev strats are a failed inside day break, but you want it, if you're looking at it the night before, you want it to be close to reversing. If we walked in tomorrow and this is opening at 1340, yeah, above 1348, we buy that. But it's just not happening. And I do have some extra time today, so we'll stick around. Not sure how long, but at most maybe another hour if you guys want to keep hammering at it. I guess for those of you guys in here, I know I mentioned a few times we are trying to get this stuff out over this past weekend. There's too much to get done. So hopefully we can have it done before the end of the week, but we're working on a full strat course. And this is it's a very big course. Hopefully you guys don't hear too much background noise, but still have a good chunk of it to get done, but should be able to get it done relatively quickly. So hopefully by this coming weekend, we can have that done. And that is what we're going to be releasing in the future. Yeah, all my live streams are always posted. So it will be posted. But we're going to have the course and we're going to go through it for, I don't know how many weeks it's going to take, but we're going to go live every day and go through that at Stat. That's the plan. So if you're interested in that, that will be coming soon, and I'll make sure you follow Stat Trading on Twitter. That's where we'll have it announced. If you don't, you can go and check us out here, stat_trading. And there's also a lot of other stuff that goes on with Stats that you guys can check out, like the competitions and all that stuff. And if you win the competition within the next week or two, you can probably get that for free. So go in there and get some good trade setups in the competition this weekend. I'm curious to see who the best performing were. Yeah, SPY and Q's puts perform the best. Nike. That's not going to be good tomorrow. Smart. Something specific for new traders. What we do have is we have every Wednesday night, Sarah hops on and she'll answer any questions that you have live and talk about that. We also do have like a trade review section, and we have Elaine doing the gappers, which we suggest new traders do gappers during the day. If you can be on during the day, that is where when I said that about Nike, I meant like Nike's probably going to get killed tomorrow. But if you're on during the day, I'm able to answer questions. We can go through concepts, stops, all that type of stuff. And during the day, it's not so much we do hand holding, but if you can understand a 2-2 reversal and an inside bar break, then you should know what we can do. Because what we're pointing out is we're pointing out the actionable signals. Like today, we're scanning through, and once the second 60s of the day open and we saw things breaking lower, we're like, crowd, 30 inside bar down here. And then you should know how to do that. And then there's also the 222 here, which we also mentioned. So it's not so much hand holding, but we will teach you and we'll help you out. And what we just suggest, learn it. You got to know it. Because if you could look at the charts the way that we do, it'll make sense. I must win that competition then. So in force, it has to be above the high and current live bar green, or below the low and red. Yes. Would the course be included for Discord members? I want to. I think that's what we're gonna do. Um, I don't know if it's gonna be. I don't. I think it's going to be a separate thing in the future, but the first time around, it's going to be the full Discord because we want to make sure everyone's on the same page, and we're going to change, or at least I would like to. I don't know if we're going to. I would like to change the way that we do sign-ons and like new members and whatnot. The thought is we may change it to a quarterly thing, so you can't join until the beginning of a new quarter. Because that way then we can do a full onboarding, like 2 weeks at the beginning of each new quarter where we get everyone on the same page, and then play the quarterly, or play the new quarter, start trading. Can you show where the stops should go as you're trading? So stops are dependent on evidence, or some people just use the same stop for everything. So when like when we're trading shooters and hammers and stuff, that should go instantly. So we want to stop really tight. And when I mean really tight is like the spread. So like if SPY has like a 10-cent spread or something, the spread plus a penny, so 11-cent stop. So like this morning, when this 60 rebroke on SPY here, 5082 short with like 11-cent stop max, because it's a shooter 60. We expect shooters and hammers to go instantly. When we have a simultaneous break, we're willing to widen the stop up. And the simultaneous break it's the bread and butter of the strat, because what it tells us of is institutional activity or algorithmic trading. So that's why we mentioned this morning, and we mentioned last week with the inside 60s, which I missed stupidly. But once we had every index breaking 2-2 day down, we have no reason to believe that should reverse. So our stop can go here, 509.56, which yes, it's going to be more, $2, but we have no reason to believe it should reverse. The other thing we can do is we could use like the day open, like so. So you can change it depending on what type of trader you are and how wide you're willing to risk. Some people, they're willing to just get in there and just, as long as you have a low or a high that you can be short or long against, they're willing to just do that. So like if we go in here, some people will go in and they'll just get long and throw a stop at the lows. They're like, all right, gap down buy if that's green, stop at low day, and that works. That's fine. The only thing is we don't want you guys using wide stops when you're learning, because if you're trying to trade gappers, like for example today, like McDonald's, if you're trying to trade these gappers, you can go and you can buy your long and you can have your stop here and you risk like $1.40, right? But the problem is when you're learning and you're taking potentially bad trades or the wrong trades or trading stuff that's stuck and you just don't know what you're doing. If you do this and you have this really wide stop, you're going to lose all your money before you figure it out. And we don't want that. So what we want you to do is when you're learning, go in with, first of all, really small size. Don't care if it's one share. Even with one share here, you make $5. Like, good, right? Do that a couple times. Sometimes you get the really big moves. Like, LSCC today, and it goes from 7.6 to 6.9 or whatever, so you make $7 if you're trading one share. But like you can see, you'd be short the 30 here, and your stop at the most is this. Ideally, it's spread plus a penny or like this open here, so really tight. The other thing then is once you can do that and you know how the stuff works, then you can be like, all right, I'm going to short. I have every reason to believe this is going down or this is going up. I'm going to give them space to do their thing, because what will happen is you'll get micro triangle layouts in here, which means when you're learning, you may have to re-enter more than once. So like if we go in here, you can see it breaks initially, and then it comes up, does not take the high of the 30 out. So that stops fine, but it stops you the really tight stop here for like 20 cents. When it re-breaks here, get short again, because you still have 15 minutes for that 30-minute signal to play out, and you just use the same stop. So maybe you lose 20 cents, get back short again, you make it all back and then some. In comparison to what most people do is they go in, let's say you're trying to do LSCC today. It's like, okay, they go in, maybe you get a short in here, and then you put your stop at high day, it stops you out. And then now you're like, wow, like I need to go even wider. And then you stop out again and lose even more. And then once you get into a winning position, you make some of your money back and then close the position, and now you made nothing. What we want you to do is go in, stop out for a small amount, catch a winner, make it all back and then some. And the other part of that is we want you adding two positions. So like when this 30 works here, inside 30 down, you can also short the 3-2 reversal here and add. It's like when that happens, you get short here, maybe you stopped out once, then you add here, and now trail the position down or put a break-even stop in and come back later in the day. And then you can also add on the 30-minute here. So by the time you're down here, you could be short one share, 5, 100, and you can make even more money. So hopefully that makes sense, but stops, they can be a hard, fast rule, or they can be dependent on evidence. Option stops, that's where I'm going to use the underlying as my stop, and I'm just going to market the option order, because we're trading the underlying. We want to know what the underlying is doing, because if this is in force on the 30 and it pops back up but still in force and my option stops me out and then it keeps going, I'm going to be really mad. But if I put my stop at the underlying here, 7692, and I'm like, okay, I'm willing to risk that, it might spike up a little bit, but if it doesn't take that out, I'm staying in, even if my option goes red. So with options, you're always just going to have wider risk tolerance because they have spreads, and you're trading, it's a 100 share leveraged position. So whenever you buy an option, you're trading 100 times whatever the spread of the underlying is normally. So if the spread here on I don't know what LSCC spread is today, but let's say it's like 10 cents. The option spread will be $1, because the option is 100 of those. Or actually it would be, yeah, it'd be $10, I mean. So a 10-cent spread on the underlying turns into a $10 spread on the option. Any ETA on the course? I want it done by the end of the week. I haven't been able to work on it. I was really busy yesterday, and that's why there's no nightly vid either. I didn't get back to like 11:30 at night. But hopefully come this weekend. But even once we finish it, there's some things we have to do on the back end with our website and just setting up the structure and stuff for it. So I can pretty much guarantee it'll be before the end of the month. But do we have futures traders? Yeah. And if you're a futures trader, you can trade the same stuff we're doing on SPY, just on the futures. Like if you go, it's like if we're looking at the SPY and QQQ shooter 60s, when this happens here, you can go short ES. Same thing. You're just leveraged and you don't have to trade the options. Thank you. I'm happy it's helpful. Inside bar breaks. So it needs to be an inside bar reversal if you're going to be doing it. But what we suggest is gappers. Trade the gappers. You want to trade inside bars and 2-2 reversals. And if that's too much, just trade either just the inside bar or just the 2-2 reversal. Because this is the thing with the strat. There is so many trades to take, you have to figure out one of them and get good at it. Because once you do that, then you can branch out as much as you'd like. Because it's all the same. Like if you learn how to trade an inside 60 on a gapper, then you can trade the inside week on a monthly or quarterly signal, and now you can swing. It's the same exact trade. It's just a higher time frame. So if you're looking to swing trade, what do you want to do? You want to first of all let things open, and let them trigger. I'm gonna need to sneeze. 1 sec. All right. So you want to let things open and trigger, and then look to confirm them. So like Alto is an example from a while ago, a couple weeks ago. Notice the 3 on the week. So they get really killed in Alta. And at that point, it's a 2-2 month down below that all month. So this happened the first week of the month. You have the rest of the month to go after that. So you want to confirm that using the week signals such as this under 441, and you short it, and that's still good. You get to hold that 2 down, 2 down, 2 down. Once you get good at it, you can take monthly breaks. The only thing is you want to manage your risk ideally to the 60 or the day. So another example of something like this would be like Dow Jones today. This monthly break occurred here, 38492. You can look at this and like maybe there's not a setup in here that you liked. Like maybe you didn't get any shorts. I didn't personally short much of the Dow. I had some off the inside week. But where was the setup to get in? It happened on the last day of the month right here. 2-2 here, and you get to short it back into that month. And now you're in. So like next month when it opens, if we go and take this out, you're in, right? So you don't have to be the first one in. The other thing we can take a look at is something like another way to swing trade using simultaneous breaks. So this is a little bit more advanced, but for example, the utilities. Notice your triangle. 3, they poke down, they poke up, they poke down. So you got this try, like so. Right here, the 2-2 day in this. We mentioned that when it occurred on the stream. We said that's a simultaneous break. So we can use this 2-2 day to set up or create new signals. This is how you snipe lows. So in the utility XLU did that. We saw every utility in there do that. So we go to Duck. Duck did that. We go to SO. SO did that down here. If you go to like AEE, AEE did that down here. If you go to Dominion, Dominion did that down here. So every utility broke while the market was crashing or puking down. So we saw rotation into utilities there. So we can take that and we can say, okay, the 2-2 day, if that works, we can take a small position here. If that works, we'll take this out, 64.91, because we're trying to go outside of this previous range here. And if that happens, we would negate the week, because you'll see the weekly open is here. So if the magnitude works and we take that out, we negate the week. And if we negate the week, we set up a hammer for next week. So we can take it here, and then we can add to it on the next week here, 65.57. And since we do that, now if you buy down here, let's say it's 100 shares, add here another 100, your cost basis is down here. So now you're playing with their money, because from here to here, that's profit. So you can put your stop break even and then let the position work. It might triangle out and stop some people out up in here, but you don't have to do anything. Until the weekly reverses, you're good. Or until that position becomes break even, stops you out, you're good. So now we're into a quarterly inside bar up in the utilities. So we can use the day to set up the week to get the quarter going. And there's also some examples of that in the staples. So KHC inside day up, simultaneous break with CAG inside up, with Keurig Dr. Pepper inside up. So notice they all simultaneously break inside up here. use that to create a position, and then you're in. Then the gap down buy in here, and then earnings, they just went crazy. But what we want to do is we want to let them give us the information. Simultaneous breaks are a really good amount of information to make a trade. And the other really good amount of information to make a trade is signals in force already and then confirming those. Which is pretty much what the SPY was today. It was a 2 up in red week, and then the 2-2 day confirmed that. Of course. I guess there's one last thing. This is something that ADEX does. They will look for just higher time frame setups. Instead of using like a weekly, they'll use like a 3-week, a 2-week, 6-week, any other type of chart, because those signals last really long. So they'll just take the signal and just hold it until it closes. It's like, for example, so this only has 2 days left, but they'll go in there and they'll just take it here. Let's say 2-2 on the 3-week chart. I got 3 weeks to hold that, and they'll just hold it. And that's what we call simple strat, where you're just taking one signal, one time frame, and just letting it do its thing. Which is possible. It's just not my personal favorite. Inside 60s are fire. If I had to trade only one thing for the rest of my life, it would be either a kicking pattern or it would be a simultaneous break across the indexes. Because the kicking patterns go so quick, and the index ones, they may not go quick every time, but they go far. Like SPY off the 60 here and Qs off the 60 here to buy, and then gone. And they also had the 2260s here short, SPY and Qs, which we traded the day before. So short here, long here, and then today, short here. And you could add short here on the inside 60, which I also mentioned in the Discord chat. New trader here, happy to have you. Forget everything you learned before and go watch the videos on my channel under Solution for Losing Traders. Yeah, it should be it should be on my channel. Yeah, Sarah Strat videos. Kicking pattern. We already went over it, but if you go onto my channel, this is where you gotta go. You gotta YouTube. Go to Alex's options here. Go to playlist, and then right here, Solution for the Losing Trader. And you can skip part 1. It's just my introduction to myself if you're not too interested in that. And then part 2 through all of this stuff. That'll get you up to speed on most things. And then what I suggest you do is watch a lot of so there's a lot of different content. Rob is where I learned everything, and he was the one who invented it. So if you type in Smiths in the Black, you can go in here. He has a playlist for all the different, like he'll do the macro stuff, the nightly vid, and the nightly vid he talks a lot about some of the things that they do intraday, the longer videos. If we scroll down, there's some 10-minute ones in here. But the longer videos in here will give you more information and just show you like what is Rob looking for. And you can see there's tons and tons of them, so you can just watch them all. And outside of that, he also has some other stuff in here. The weekend vid. He has the A to Z poem. If you want to learn how to draw the broadening formations, he goes through, I think, the whole S&P 500 or every stock A to Z. It's like multiple videos. And there's also some other content from him on Sepia Group. If you want to learn from the guy who invented it. And there's some pretty good little gem short videos up in all of this stuff. So like this is a 5-hour stream from him, but you can see here, and then sector rotation, the power hour, trading a mother bar, what is a rev strat, like all types of stuff. The strat, there's so much free content out there that we tell everyone like you don't have to pay anyone to learn it. If you want to go and join our group and hang out with us during the day, then yeah, go for it. But I didn't pay anything to learn anything. You can trade just one time frame. You can, but it has to be a bigger time frame because when it comes to bigger time frame signals, they last longer. So you can take one break and then you can just let it go. When it comes to like a daily break, unless it's a simultaneous break where you have reason to believe it should keep going, the daily break only lasts a day, so we don't know. Which is why we want to use like if we're trading daily signals, it's like we're trying to use the daily guys to trigger higher time frame guys. Like give me the daily guy who can trigger the quarterly guy, and then we'll see if the quarterly guy's serious about getting out or in or whatever they're doing. Shooter scan, yeah. Go into scripts and scans in the Discord. It's under learning the strat in scripts and scans. So if you go to stratalerts.com/discord and then go into scripts and scans in here, you can download in here. So this is my nightly scan for all things ever. This is the shooter and hammer scan. So you plot signal and then hammer or shooter, and that'll give you that. The best bigger time frame trade, 2-2 reversal, probably the simplest one. Like let me show you. Or a 3-2-2. 3-2-2 is a really good one. It's like Amazon. This is from many moons ago. 3-2-2 right here on the month, and then gone. And you can see right into the new all-time high, and that was the take profit. Netflix did that the same exact month here. 3-2-2 gone. 8x is in here. Nice. Yeah, 8x. We should have a stream sometime soon. I want to see what you're doing with the 3-2s. I see them all the time from you guys. Yeah, shoot me a DM. We should do it. I don't know if we could do it this weekend or something, but soon. The Andrew Tate course guy got me chopped up. Oh, that's so funny. Yeah, the stream's gonna be public. Oh, Jose, that's hilarious. I'm posting that on Twitter. That's so funny. Yeah. All right. Well, we got about 2 hour and 20 minute streams, so that's 6 hours of stream for me today. So that's gonna be about it for me, guys. But going into tomorrow, if you're interested in the gaps and stuff, I will. I'll have that posted on Twitter, and Elaine is also someone you should take a follow if you're learning the strat and you want to trade the gappers. You can go and check her out here, Elaine Bins, and she posts the gap list every single day from the Discord. And in the Discord, she's gonna be alerting on those gappers. So that'll be about it. I will see you guys in tomorrow's nightly vid after hopefully a really fun trading day tomorrow. And I hope you guys have a good rest of your night. Adios.